Welcome back to another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And in today's episode, we are talking about whether the RBA is going to lower the cash rate in July 2025. There's been a bit of talk what's going to happen. And now with some recently released data, it's probably safe to say we're going to see a rate cut. Is it going to be 0.25%? Is it going to be 0.5%? Who knows? I personally think it'll be a 0.25% rate reduction. I don't think the RBA will go in and just reduce it by 0.5%. However, I do think that there are more rate cuts coming, and that's because a couple of things that have come out recently. If we have a look at the ASX rate predictor, 2nd of July, it increased to 100% chance of decreasing to 3.6%. And it's kind of progressively since the 19th of June where it was at 78%, it's just progressively increased and increased. There was some data that was released around CPI and the inflation. So for May, 2.1% was the CPI, and that rose from where it was 12 months ago, obviously up 2.1%, but it's decreased since April, which was 2.4%. Now that's starting to sit in the RBA's target range. So that's saying that these rate increases have worked, and it's probably arguably that they've left it a little bit too long, and that's where we're going to see these rate reductions come a little bit quicker now. Based on history, the RBA does tend to take a little bit longer to increase when needed, but also decrease. So it's something that we can expect. I guess just a little bit of an understanding still of sentiment in the economy. The annual growth in retail spending is only at 3.3% and has dropped from 4.6%. So that's really saying that there's not a lot of people still out there spending money, right? So even though we've seen a couple of rate reductions, it really hasn't trickled through as yet. So we will find out next week. At the time of recording this, it's less than a week until the RBA does announce that. So we'll see if I'm right. We'll see if the ASX is right. However, it's likely that we're going to see a rate reduction. It's going to mean improved cash flow for borrowers. It's going to mean improved borrowing capacity, and that's going to lead to price growth. And if it's in those right areas that are prime for growth at the moment, because there's many other metrics that are taking into account, it is exciting if you're going out there to invest in your financial future, because you're going to reap the reward. You're going to get that strong performance, which you can then leverage and use to go into another asset sooner. Nice short one today. I hope you enjoyed, and we'll see you on the next episode. Bye.